Welcome back to the channel. So I'm trying to get into the habit of making more videos again, and there's a recent trade idea that I just put on just a couple days ago that I figured since it's fairly early in it, why not share it? It also opens you guys up to these type of ideas moving forward. So the stock that we're talking about is Home Depot. They reported earnings just a few days ago, as you can see, and there's a particular strategy that I like to employ, which is called earnings failure, which Home Depot did exhibit, in my opinion, a few days ago. And just to explain it, let's just hop into the 1 minute chart. And we're gonna back up a little bit here and look at the day of earnings, right? So earnings is released in the morning of Tuesday, which was of this week. Stocks traded lower going into the cash open. The cash open was at 9:30, which is just about here. But as you can see, the stock traded lower heading into it. But then it reversed higher. It actually ended up closing above the previous day close before earnings was released. And this was on the back of poor earnings. The earnings were fairly mixed. Guidance wasn't that great. It was even a little bit below the midpoint of what was expected. You had news articles such as this one coming out saying, why it's a flaming hot mess. If you took a look at analysts here, even though it's still rated as a buy by analysts, price targets have been lowered right across the board, right after earnings. So clearly earnings was not great, okay? It didn't quite meet expectations, but the stock went up higher. The stock went up higher in face of poor earnings. I consider that to be an earnings failure. And a couple of days ago, I did end up posting about it. What was it here? Long Home Depot here. Looks like a possible earnings failure move, right? Which was, what was Home Depot trading at that moment? See, I haven't been using stock twits that often, so 302.90. 302.90 was essentially when I posted about it, that in my opinion, it looked like a earnings failure. So 302.90, which should be somewhere around there, right? Which is about a pretty good entry here. Normally, I would use the previous day close as a trigger, right? So the previous day close, let's say, is right there. So in my opinion, if price had passed that and closed above it, I would have entered into the trade, which in this case should have actually been on that same Tuesday at the close. I should have entered, which would have probably gotten me close to about the same entry that I got the day after. Was it which day did I get into it? May 19. It might have been actually the same. I actually did get into it the same day. It looks like I might have just paid top tick for it. That was the only difference. So I did pretty much top tick it on that day, but I got into it. And since then, it's gone up. We had 2 strong days higher, and today it's a tiny bit lower. Now, here's the thing of these earnings failures. Just because we're seeing this move. So first of all, why does this work? Well, this might tell us that all the bad news hasn't priced into the stock already, that there's exhaustion on the selling tape, right? That all the buyers that wanted to leave, they might have left by now. And everyone that wanted to short, they might have shorted everything by now. That there's no more additional selling pressure. Again, we're obviously speculating on this, okay? And we're using the reaction of the earnings as a way to kind of give us that catalyst. And then we're playing the stop off the day before earnings as a way to manage this trade. So essentially, any close below 300, in my opinion, kind of nullifies this trade. We expect it, and in general, of earnings failures, you expect the stock to trade strong in that counter trend. So once this begins, I do not want to see Home Depot start moving in lower and chopping around a bit. I do expect it to keep pushing up higher. As you can see, it's been a very tough 6-month period for actually a year. It's been a year now since the stock has been trading downwards. Hasn't been doing great, okay? So it's not like we're hopping into a trend that benefits us. And personally speaking, I'm not a big fan of hopping into trends. Well, I took on longs in this case. I'm not a fan of going long into a tape that looks bearish, okay? More times than not, it's not a great trade to be taking. I would have much rather preferred an earnings failure on a bullish stock. Just to show you guys an example here, see a similar thing happened with SanDisk. If you go to their earnings, I have to go to the 5-minute chart here just so we don't spend too much time crawling around. But look at their earnings for SanDisk real quick. Earnings comes out, the stock clearly trades lower, right? Afterwards, like it's still lower the next day in the morning. And then in the AM section, it really reverses higher, right? This was an earnings failure, but we would go long. We went long on this. I went long on this, and the trade worked out beautifully. Where is it, right? Because that was essentially right here in the right under 1,000, and it just bulleted up, right? This is the highest reward and most likely to succeed is when we have this earnings failure on a stock trading in a particular direction and we get back into that particular direction. So this is the best setup that we can hope for, okay? But that's not the case of Home Depot here. We're essentially trying to mark the bottom here. Very tough thing to do, especially because it might maybe go for a few more days before we reverse lower. So we have to kind of find a way to manage that risk. Something else I want to point out, if you look at the US home construction ETF here, which is ITB, it will share a chart relatively similar to Home Depot here. So we can see it hasn't been doing that great. Part of this, as of recent especially, rates have been going up. That's going to crush the construction sector quite a bit here. Normally speaking, you know, on these type of trades here, if I can get the whole sector rotating in the same direction, that really increases the chances of this trade working out for us. As you can see, as Home Depot has begun to move up, we are seeing the home construction ETF also begin to move up, which is a good sign for us, right? We do not want it to essentially be fighting the wave here because of the construction ETF were to be going down, and Home Depot will be struggling in that case. So again, hopefully we see a good counter move from here. Again, Home Depot is only trading what is like 2 or 3% above the entry point, right? If we look at above the trigger point, what is this? Yeah, about 3%, maybe just a 4%. Hasn't gone up that much more. I'm gonna show you an example. Lowe's is a stock that actually did something similar. So obviously they're in the same space as Home Depot here. And you could see a reversal here on earnings day, right? Okay. It is not trading as well as Home Depot is, because as we remember with Home Depot, it's traded higher after earnings for a few days. Lowe's actually is kind of revisiting this. So if we did take it, I did not take this trade because I was already at Home Depot. Had I not been, I would have been taking this trade and probably being stopped out on it because we have to respect, I would have been stopped out yesterday because we do have to respect the fact that it is closing below that candle, right? This would be our entry. This would have been our exit here. It's kind of turning lower. So that's kind of interesting, right? That Home Depot is clearly showing strength. Lowe's is not. Which, in my opinion, almost increases the chances of Home Depot being the better play here. Simply because it is showing strength against one of its strongest competitors, right? Lowe's is also not looking great here. Very similar chart to Home Depot, where Home Depot is clearly working better. So with this, I mean, this is my trade idea for you guys. It is a massive counter move to the overall market right now. You know, we do have the SPX trading at all-time highs here. I know some of you guys might have been left out on this rally, have no clue where you want to head into because a lot of stuff is super high up right now. You know, especially we have a lot of semiconductor stocks. I mean, still making all-time highs today. And then we have RSIP, which is equal weight ETF of S&P, also making brand new all-time highs today. I get it mentally very tough to hop in and chase these stocks that are going higher, even though more likely than not, they will continue to go higher. But if you're looking for a good reasoning as to why it makes sense to possibly bottom take Home Depot, hopefully I'm giving it to you guys. Now, with that being said, thank you guys so much for watching. If you want more content like this, let me know in the comments, subscribe, like my videos, and I'll try to make more of these moving forward. Thank you.